Paul, LaMonica and Clare Sebastian are here with me. Those three, Harley, Goldman and Whirlpool. Paul.
Well, as you point out, Goldman Sachs, their results aren't going to be hurt by the tariffs necessarily, but a dire warning about corporate profits. And when you look at what happened with Whirlpool, this is a company that cheered the prospect of tariffs at first because they thought it would make them more competitive against Korean manufacturers of washers and dryers, other Asian manufacturers. But now the steel and aluminum tariffs are hurting their business. And that's why that stock, you need a lot of bleach to make it look good. It was down 15% today, Richard.
And I think this is a measure of the complexity of the trade environment that we now see, Richard. These two companies are being hit in multiple ways. So with Whirlpool, first it was a good thing, now it's a bad thing. With Harley, it's not just the EU retaliatory tariffs, it's also the input costs, the steel and aluminium tariffs. So they're being buffeted from all sides. And I think that's why we're starting to see this show up in earnings.
But at least with Harley-Davidson, it's the type of thing where we're back to that somewhat strange, the news could have been worse sort of environment. Harley's stock actually rallied today because the sales in Europe and other international markets were up. I think people were expecting a lot worse.
But I want to focus on this seemingly difference between the president who says tariffs are great, and he says now is the time, Paul, the economy is strong enough, now is the time to take on this issue.
It's a little bit perplexing to me how he says at the same time the economy is great, which it is doing extremely well, but that we need to start a trade war with just about everyone in order to make the economy get even better. Because, I mean, what does he realistically want? 5% GDP growth? 6%? I mean, we're not China. You do that, the Fed's going to start raising rates pretty aggressively, and he's not going to like that one bit. I think that what we have seen, and I think this is why the market rallied today, despite the Whirlpool results, the market's tuning out the president once again. They know this is all a negotiating tactic.
Pause on that moment while we listen to Peter Tuchman talking to me earlier at the Stock Exchange and Quest Express.
The question is, are we trading earnings? Okay, what is people's focus? Are we trading strong earnings or are we trading geopolitical risk? And the market's telling us that we're trading strong earnings because there is so much political risk. We have a wild card coming out of Washington. We have all this potential stuff with Iran. We have this stuff going on with Russia. And we have tariffs and trade wars, right?
And we're still up.
And we're still up. We're not up just up. We're up a lot.
But Claire, if the market is trading earnings and the earnings are good, the market isn't factoring in this tariff warning. I mean, the market took Alphabet's $5 billion fine in its stride.
Right, and I think the earnings season has been really good. But, Richard, we're not at the end of this trade dispute. There are still other wild cards out there, other shoes to drop. Don't forget, Jean-Claude Juncker, the head of the EU Commission, is going to Washington this week to try and talk about these auto tariffs. We've got a potential another $200 billion in tariffs on Chinese goods. Jamie Dimon, the CEO of JP Morgan, told Christine Romans this week that if you get that $200 billion on Chinese goods, that could reverse the gains that Trump has created in this economy. So there's a couple of sides to this.
It's still too soon, I think. Don't you agree, Claire? I mean, I think the issue is that companies are going to report their third quarter results in October and have a much better sense of what their 2019 outlook is going to look like. That's the time to be wondering, are we in a full-blown trade war? Because there's a lot that's going to happen. There's a lot that's going to happen, though, between now and October with regards to whether or not we get those auto tariffs, whether or not the U.S. and China actually decide to have more meaningful discussions and then walk some of this back. I mean, if this escalates, October could be one of those scary, ugly Octobers. If Trump and the rest of the world make nice, we've got Peter Tuchman talking about more record highs, and you get another hat.